You get with a loan officer who likes to hear himself talk, and I just kind of keep it straight and like straight shooter.
Yeah.
They make it so complicated and things like that. It's really not that complicated of a process if you're working with the right people. My thing is just trust your team, and the people who got you there, let them take you to the finish line.
John Lee Real Estate, find you the best rate. All throughout Philly, like Schuylkill Expressway. Talking to people who out of the 215, even
Hello everyone, this is John Lee, your local real estate agent in the Philadelphia and greater Philadelphia area. We are here for a treat. We have a mortgage advisor, Dennis, my buddy over here. Dennis, if you could actually introduce yourself to our audience, a little bit more about what you do and what you got going on.
Sure.
Yeah.
Well, dude, thanks for having me.
Yeah,
Great
of course,
pleasure
man.
to be here. My name is Dennis Callan. I'm the owner and founder of Colonial Mortgage Advisors. So we have a couple offices in the area of Conshohocken, Lafayette Hill, Bluebell areas. And yeah, opened this about 4 years ago now, and hit it perfectly at COVID when rates were super low. And I've just been riding the wave. Been in the mortgage business for 22 years now. It's crazy to say.
22 years. Oh my gosh. Okay.
Yeah.
So you pretty much saw everything.
Yeah, we got
Yeah.
in right after college, and yeah, saw when rates were at the sixes. I thought that was crazy, and then it rode them all the way down into the low threes, refinancing everyone, and then kind of rode the wave back up now to when we were as high as 8% last year. So it's been pretty crazy.
So is like the mortgage industry, is that all you know? Like, have you grew up like into that business, or like,
No, it was kind of a crazy thing. So I went to Penn State and had a finance degree there,
okay.
and was graduated a little after 9/11, and trying to find a job was a little bit tough. And I interviewed with a couple financial institutions, and they're like, "Sure, you're hired. Just bring a list of your friends and family, and we'll start calling them and asking them for money." And I was like, "Well, that sounds horrible. I don't feel like I want to do that." So
Yeah.
I kind of fell into this job in the mortgage business, where I thought giving people money was a little bit easier than asking for it. Yeah.
Yeah.
So yeah, my first job, it was crazy. We started it's kind of just a chop shop, and it was as rates were coming down at that time from the sixes, and you took paper applications. There was no computer, and there's just phones rang off the hook. And we got paid $250 a loan.
Oh wow.
Yeah, it was crazy. And then in my fourth year, I set the company record, and I would close 40 loans in a month. I closed 40 loans in a month and made $10,000. And as a 22-year-old kid, I was like, I've hit it rich.
Yeah,
This
yeah.
is awesome, $10,000. And I don't think I closed 40 loans in a month a couple times since then. And needless to say, I was getting paid what I should be getting paid, and
Yeah.
it's been great. But yeah, that was fun back then as a young kid, and seeing in the sales business, the more I just worked. I didn't have a better sales process. I just outworked everyone and stayed later and answered the calls, and you get rewarded for that. And that's what I kind of love the business.
Yeah, let's actually kind of piggyback on that. And I know exactly how you feel, or how you felt with I guess your first experience in sales, because when I started off selling life insurance, that was my first job.
Oh, nice.
So it's one thing to sell like to someone while they're living, and then it's another to sell something when they die, right?
Exactly.
Because obviously that's like a different kind of sell. So, but yeah, it was tough. The same thing. It was like open up your phone and call all your friends and family. And I'm sure I have some of my former friends, probably not friends any longer, because I probably bothered the crap out of them by calling them. Yeah, so it was a little rough even for me. But how did you segue into going into that, and like obviously you doing so well with the mortgage industry? Like, how did you segue into like where you are now?
Sure. So it was a little bit of a bumpy ride. I kind of got out of there, and then we got into some crazy loan programs when it was the Wild West of mortgages, and we were doing over equity loans, or over the equity of your house, and like debt consolidation things. And after the whole meltdown, I kind of had my first taste of the broker world and what that looked like, and bounced around to a couple different companies there, and really learned the business, how it should be done. and then refinances started. I was heavy refinances. So all my relationships were with financial advisors and CPAs who could send me their clients who were looking to refinance. And then kind of when we started coming back up, I had to pivot over to purchase business. So I had to kind of flip the people the people who I was working with really weren't as good resources as I needed anymore, because I needed to be realtor relationships. So I built those relationships up, and then I'd been working for a company, and things changed. It was a very small company, and things changed overnight. And I had run my own branch, and they started getting in my pockets of like nitpicking things. And I'm like, I don't know why I'm even here. Now they're changing my compensation. And I just wanted to, I said to two other branch managers, listen, I'm going to go open my own shop. Let's partner together. And we all did that. And it worked out fine for a while. Then we realized we weren't on the same page on a couple things. So we each kind of split out and did our own thing. And then that's 4 years ago when I opened Colonial Mortgage Advisors, and it's been great.
And here you are. He is our in-house lender here at Keller Williams. We are in the Blue Bell office. So he's holding the fort down over here for us. For our listeners, can you just briefly explain what a broker is in simple terms, and how that might be different than the previous like mortgage companies that you either worked for, or other mortgage companies in general?
Sure. So a mortgage broker is kind of like same as your insurance broker. So look at it as, say, a Citizens Bank, a mortgage person in that office can just sell what the bank tells them the rate is for the day. For me, I can go to Citizens Bank, I can go to Rocket Mortgage, I can go to a lot of times a bunch of other wholesale lenders that you've never heard of, and find the best pricing for you, instead of you having to call everyone that you see on Bankrate or whatever. I have access to wholesale rates there, and it just gives me a lot more flexibility with not only your standard buyer, but also a lot of your investor buyers, and some of those unique programs that maybe the Citizens Bank guy doesn't have access to, or credit scores that they can't go low enough to help.
So is there ever a situation where using like a Citizens or like a primary bank would be better than going with a broker, or is that like, or a preference, I would say?
Yeah, it just depends. Like, not downplaying anyone, but the Citizens, or the bigger banks, have some unique grant programs that as a broker, to be honest, I probably don't have.
Right.
So yeah, it's always good to check there. But for your step-up buyers, and you're probably people who aren't qualifying for those lower income loans, yeah, we're going to be pretty tough to beat.
Just in the rate alone.
Yeah, if you're rate sensitive, things like that, or maybe you have some lower credit scores, we're going to be pretty tough to beat, just because with the access that we have to all the different programs.
Yeah, I mean, also from the experience of a realtor, it plays a huge part for our listeners, especially when you're going with a lender, because a lot of these big banks like Wells Fargo and ironically Citizens, sometimes they take a long time for them to wire the funds at closing. So then it causes delay. So that's the other thing. And having a mortgage representative or a broker who understands that timing is really important for realtors, and also the experience, right? They want to make sure that it's as seamless as possible. Those are all some intangible things that I want to also mention to, for our listeners.
It's a huge deal. Like, people, I don't know why they don't trust they're trusting their agent to get them the biggest purchase of their life, but a lot of times they don't trust them to say, hey, this is my team, use these guys to get us to the finish line. And it's crazy. I feel like you guys should make a video at closing when their deals go bad with another lender, or even just say, hey, John, I should have listened to you, because we just sat at closing for 3 hours waiting for the last minute changes, or the paperwork wasn't here. And then you could show that to your people afterwards and say, hey, listen, people went on their own and didn't listen to me, and this is what happened. But yeah, for us, it's the advantage that we're going to do is a lot of times we know the other agents that you're making the deal with. So I'll call them and say, hey, listen, the Joneses are rock solid. I have all their paperwork. I have, I've looked at everything, and we're going to have no problem to get this to closing. So that helps win you the deal sometimes.
Right.
I'm super accountable to you. I want to continue getting business from you. So I'm going to make sure that we do everything we can to get it to closing.
Right.
That guy at the other end of the 800 number that they called from some online person, he's going to go to sleep at night, whether that deal closes or not. That's obviously he cares, but you're not coming down and knocking on his door like, dude, what's going on here?
There's invested interest not only in the client, but obviously the relationship you have with the realtor, which is extremely important.
That's a big deal. And we're going to be at closing. We don't have some big team that the file gets shipped over to North Carolina where a lot of the underwriting is for the national banks. And then the right hand doesn't know what the left is doing. Like, you're going to be able to get a hold of me. You have my cell phone. So it just makes a big deal on that service side of it.
I think also the biggest misconception is I think people think I get paid to refer.
Yeah, definitely.
Refer a lender, which I don't get paid, guys. So I don't get paid to refer a lender. I don't get paid to refer a title company. It's honestly for your convenience from start A, to start B and to finish. So
I'll buy you a lunch, but there's no envelope being slid across the table after closing. It doesn't work like
that's
that.
the most important part, and I think that's the first thing that I definitely want to address because I think for some reason people already think that you and I get paid a lot relative to our to our work, and then they think that is he potentially getting paid more to refer business? But it just so happens by being a realtor, like a lot of the times I'm quarterbacking a lot of those things for a client. And to make sure that the experience is as smooth as possible, whether it's to refer a contractor, a lender, a title company, even inspectors. I can go on and on, but the experience needs to be flawless, and having the team and the backbone of the team to really make that experience really good is very important. At least to me.
100%. Yeah. This guy's closing multiple deals a month. Your dad or your mom, who's maybe bought 2 or 3 houses, 4 or 5 houses, if they're kind of cranking through them, and over their lifetime, yes, they love you and they want your best interest, but their referral or their input, while you want to take that into consideration, you're the expert. You're doing this. You've seen everything out there by this point. You know what to do, and I think your word should be trusted over anyone else's. Yeah,
and it comes down to, at the end of the day, it comes down to reputation. I think that's so important in the real estate business. So me working on both sides, not just as a realtor, as an investor, reputation's so big. And anytime I look at, even from the selling side, not necessarily from the buying side, if I'm a listing agent, if I am helping and representing a seller, one of the first things that I look at is the lender. Is the lender local? Is the lender reputable as a local lender? And is the lender going to be able to take it to the finish line? There are as many, you would agree, Dennis, there are as many bad agents as there are lenders.
Yeah, it's a crapshoot, especially if you're going with these big banks. You have no idea who's going to be on the other end of that line.
So why do you think that there's a huge discrepancy between the level of skill and expertise? I mean, I can say that for realtors, but I want to see it from the perspective of a lender. Why is there a huge skill gap there?
I think a point of it is there's no sense of ownership. So I own the company. A lot of the local guys that dominate the area, we're business owners. We have that mentality, and we want to just, like you said, it's our reputation on the line. They're Googling me and leaving me a bad review, which I don't have anything, knock on wood, if something goes bad. These other guys, there's no sense of urgency. Like, they're almost, and again, nothing wrong, but they're like just punching the clock. And again, if the deal goes through, it goes through. They're not missing answering that phone at kids' soccer practice or anything like that. So yeah, I think that's probably the big disconnect in the level of service that you're seeing between maybe a bank person versus a business owner mentality.
No, I 100% agree. And I think, to be honest with you, I was trying to get you a little layup there so that you can get a little plug in there. But yeah, that's exactly the reason why, because I think when someone works at a Wells Fargo or a Citizens, there is a sense of entrepreneurial mindset, but there is a huge discrepancy of ownership, if that makes any sense.
And again, there's a lot of guys that crush it and do way more bigger numbers than me there, and those are great. But it's just again, you're rolling the dice if you're calling Rocket more like who's going to be? Is it an ethical person? Are they trying to really get you the best deal out there? That's kind of the thing.
So switching gears for our audience, you've been in the business for such a long time, right? And you've seen rates go up, down, sideways, right?
Yeah.
I know that a million of our listeners are probably asking me, where do you think rates are going to go? And like, what is your perspective and outlook with rates so far?
It's been crazy, man. Just to think 4 years ago now, we were in the 2s, and last year we hit 8. So it's been, I haven't done a refinance. I think I've done maybe handful of refinances. That just used to be 70% of our business through COVID, and now it's maybe 10%. It's crazy. So right now, as of the first week of June, we're in a little bit of a good streak. We're back under 7%, and hopefully, it's weird. You're almost rooting for the economy to do, selfishly, you're rooting for the economy to do poorly, because that's what's going to help inflation come down. And then inflation comes down, the Fed gets their numbers to where they want to be at 2% inflation. And then they'll start bringing rates down, and kind of everything will come down and follow that. So it's fine. I've been saying next year they're going to drop, and it still hasn't happened. But I think we're seeing just today some job report numbers came out weaker than expected. So if that continues, we should start seeing that come down.
Yeah, I mean, it's surprisingly, you look at the, I know a little bit, because with rates and how they work with like the Treasury, right? The short term and long term.
Yeah.
It's kind of weird because it's like the short and long term are kind of relatively almost similar as far as where the rates are. But then you have other factors like the economy and jobs, right?
Yeah.
And then supply. Housing supply is just ridiculous right now. Like there are just not enough houses to be bought. There's just no inventory. So obviously that's what's driving up the housing prices.
Of course.
Too. So where do you see like this whole standstill? Is this something all new to you, or is this like, I haven't been in the business long enough to see everything. So like, does this remind you of a certain time, or is it something different, or like, what's your take on it?
No, this is totally different. And I had to do a good job and probably 2 years ago when we got up to these high numbers, my head was not in a good space for this, just because it's like, my business doesn't work at these numbers. It's crazy. I've kind of changed that mindset a little bit. But yeah, this is totally new to any probably mortgage person. That's maybe, you got the older guys and they're still doing mortgages in their 70s. They've seen stuff like this before, but anyone who's been in it in the last 20 years, we've never seen rates this high. So that plus the supply shortage is just the supply shortage doesn't really affect rates too much, but it's just crazy getting deals accepted, which affects our business, because you're pumping out all these pre-approvals, but then the clients aren't willing to do what's needed to get their deal in the contract to go $50,000, $100,000 over, which you can't blame them. So it's way different than anything we've ever seen.
Yeah, because I talk to a lot of these old geezers, and I don't want to call them old geezers, but a lot of guys that are very, very old, and they'll say, well, I remember when rates were 10%, but I was like, 60 years ago, when you bought your house, how much did you? Oh, I bought it for $50,000.
Exactly.
Well, you know that $50,000 house is now worth $500,000.
Yeah.
So like, there needs to be perspective here with rates relative to the cost, right? So like, I'm finding that this is like, when I got in the business 5 years ago, things were just good. Like everything was good. Rates were good. Housing prices were, I still thought they were high, but it was in relation to rates were still low. So now that rates are high and housing prices are high, I'm just like, wow, this is like very, very interesting. So, what's your general take on that?
It's tough. Like, I feel bad for these younger guys. We actually had 2 brothers buy a house, and they were in their early 20s a couple weeks ago. And I was just thinking, I was like, man, I congratulated them, and their parents were there at the table because they helped them out some. And I congratulated them because, like, man, I'm not seeing young 20-somethings buy houses anymore. It's tough out there. So you feel bad, honestly, because just people are just getting beaten down some in this market. But yeah, it's if the piece of it where people are saying, oh, I'm going to wait till rates come down. And it's just such a mistake, because all those people are thinking the same thing. But when they flood the market, then what happens? That the demand goes up and then the prices go up. Now that 50,000 is going 75,000 over, and it just becomes all the 15, 20 offers that you guys are digging through. So yeah, it's catch it on this way down and be the first ones in, and do it this year instead of waiting for another 2 years. There's calculators that people play with that we send out all the time. The cost of waiting, the numbers there are staggering of how much more you lose in not only in equity, but in payments to rent. Play around with one of those calculators online and see what that gets you. Yeah,
no, I appreciate that. And there's actually a rock star agent out in Atlanta. Her name is Glenda Baker, and she's awesome. And one of the TikTok videos that I saw, she mentioned was that it's going to come to a point where, like, even for my kid, like not granted, my kid's only 7 months old, but like I have a feeling that he's not going to be able to buy a house on his own. Like he's going to need my help.
Yeah.
The way and direction that these houses are going with pricing and relative to the rate, it's like everyone's getting almost priced out. So I think it's been pretty difficult, and I'm glad that you were able to share that insight.
Yeah, my pleasure.
Yeah. I mean, apart from that, I mean, overall, like, what are some things that our listeners can do when talking with any mortgage broker, as far as what strategies can be implemented, or even what products that you or a mortgage broker can offer?
My thing is just talk to us, reach out. Even if you're saying, hey, I'm still a year out, I'm 6 months out, have a conversation, because there's a lot of things that we can do to set a roadmap, or maybe do things ahead of time before we get into an application, because we can take a look at credit if you think your scores are low. We can, if they are low, we can send you to some credit repair companies that are reputable, not just, again, 1-800 numbers that you hear on the radio. People listen to the radio anymore? I don't know.
Podcast?
Podcast. Well, I hope they're referring to podcasts.
You're just showing your age, man.
So, then, yeah, so the stuff like that where we can get ahead of it. Even if you think you have good credit, it's still good to have us do that pre-approval as soon as you're thinking, because like you can have an old bill from a previous living in college or something that you didn't know, a utility bill or something that can bang your credit. And a lot of times those apps that people are following aren't the most accurate as far as credit scores. So we want to get all that done as soon as possible, so that when you go start looking and you fall in love with that first house or first couple houses you see, and then you start that process, there's no surprises, and we get that done right away. So the sooner the better.
So to add on to that, what you're essentially asking for people to do is to get a pre-approval, more or less, right? It sounds like. Now, there are so many lenders out there that will give a pre-approval, and by the time you get to closing, something happens, right? What's happening there? Like what is the mortgage broker doing that is, what are they supposed to be doing, and what are they not doing? Because obviously that comes with reputation as an agent. Like if I'm trusting you as a mortgage broker to get my client a pre-approval, my expectation is that that pre-approval is going to be rock solid. There's been situations where I had referred my client to a mortgage broker. We got a pre-approval, but then they were not able to close because for whatever reason, the pre-approval was no good. Can you explain how that can be a problem?
Yeah. Well, truthfully, you could go to Rocket Mortgage right now, type a couple things on their website, and it'll spit out a pre-approval, which is mind-blowing to me. So obviously you don't want to do that. You want to have a live body looking through that, looking through your documents. So yeah, it just depends if people are cutting corners and they're not getting all your documentation, or maybe you filled out the application quickly on your own and then they didn't go through it thoroughly, and maybe you didn't check the box that said you have child support or things like that that the loan officer didn't know about. That could cause a huge problem if you got into the process and they say, okay, well, what's this auto deduction coming from your pay stub? Oh, that's my child support. Oh, we didn't tell us that. But if they got your documents up front, they would see that pay stub with the child support coming out of there, and then they could ask you about that, and then that doesn't affect your debt to income ratios and possibly kill the deal. So yeah, things like that. That's kind of one example of how things can blow up during the process. Obviously, you just want to make sure you're working with someone who's, well, it's a pain, and everything will probably have to be updated 3 months later when you're on the contract. You just want to share as much as you can and supply as much as you can up front. It just makes that process that much easier.
I always tell all of my clients, and I still tell them even to this day, the mortgage broker or the mortgage advisor, their natural interest is for you, because at the end of the day, they need to close on a loan, right? So they want to make sure that they hear you and that you disclose to them everything about your financial picture so that they can correctly convey that over to the lending company. So that's very important. I'm sure there's been instances where people think that they want to either omit certain information to you.
Yeah.
Or I'm sure you've had that many times, or they're afraid to tell you certain situations in their financial picture. So I want to just disclose to all of our listeners that any lender is really out there to help you. They're not there to not get you a loan.
Yeah, just be upfront. It's like, I'm here. I'm on your side of the table. I want to close loans, so obviously, selfishly, I get paid too while you get into your house. So a lot of times there's ways to kind of, obviously all above board, but there's ways to structure the deal or kind of word things or do certain things where it's allowable, where if we found that during process, while the underwriter's already seen it and the underwriter has to bring it to me first, that's where the deal can blow up.
Right.
So if we get ahead of it and word it correctly to the underwriter, oh, this is what this is, then like, okay, that makes sense, instead of them having to think we're pulling a fast one when I had no idea about it.
Right. So that's why it's always important to disclose that to your lenders. And I've been in that situation, and I think a big part of that is a lot of my clients are obviously Korean. Korean clients also have, like, they deal with a lot of like cash assets. So disclosure is not our community's best friend sometimes. So
sure, it happens.
There's been some situations. So I do want to let everyone know that ultimately you have someone on your corner with a lender. And anytime that I refer a lender, I always tell every client, and even my clients now, I'm pretty sure you guys know that I always say disclose everything to them. So that's very important. But yeah, apart from that, I mean, was there anything else that you wanted to share about yourself, about the company, about what's going on in the mortgage industry for our audience? Any parting words, anything that you wanted to?
No, the mortgage stuff is, obviously, we take it for granted. I know it seems like some huge mountainous thing that, like, but it's pretty, especially if you're a W-2 employee and have been at your job, like, it's not that complicated. And people maybe try to talk, like, you get with a loan officer who likes to hear himself talk, and I just kind of keep it straight and like straight shooter. They make it so complicated and things like that. It's really not that complicated of a process if you're working with the right people. So yeah, just trust. My thing is just trust your team and the people who got you there. Let them take you to the finish line. But yeah, as far as the mortgage side, that's fine. But I was going back to your point of the real estate thing of buying for your kids. I know you're in real estate besides as an investor, and so am I. I think that was my thing. I was like, okay, well, if I can buy property now to give to my kids to get their foot in the door and just put this mindset stuff and show them the right tools ahead of time, I think that's such a big piece for when our kids are older. Our kids are, yours is still throwing up all over the place, and mine are in high school too. So it's a little different. You have a lot more time, but yeah, I think that's just a great piece too, that you're seeing a lot more parents helping their kids with college. So if you can be investing in real estate, we work with a lot of investors, as do you, that's another way to get that much further for your family down the road. Right.
Yeah, I mean, definitely there's so many ways you can make money in this business, right? You can make money off of being even title, right? Title makes money. You make money, like mortgage agents, wholesaling, flipping a house, even sitting on a property, you know, just renting it out and then just having it appreciate over time. So
I think that's the easiest.
I think that's why real estate's so beautiful. There's just so many ways, so many people involved, and you can't obviously do it on your own. So, but yeah, for our listeners, where can they follow you, reach out to you? How can they get to know you?
So I apologize that I never got back to your assistant. I owe him a couple of my links that I'm sure will be around here somewhere.
It'll be in the description. So
in the notes. But yeah, our website is colonialmortgageadvisors.com. You can apply there, reach out to us through there. That's probably the easiest. And I have some social media. I kind of blend my personal and business together, so you probably won't find trying to be better at that and getting some business. But if you want to see my kids, you can just find me on that side. We have a lot of fun.
Okay. All right. Well, Dennis, thank you very much.
Yeah, my pleasure. Thanks for having me.
Bye, brother.
Bye.
John Lee Real Estate, find you the best rates. All throughout Philly like Schuylkill Expressway. Talking to people who out of the 215, even the 267, who always helping like, oh, no time for no student.